Hello and welcome back to the channel for Fibonacci Part 2. I'm Crypto Trend Trader. And before we get started, I'd like to say that this is not financial advice. I'm not a financial advisor. I'm just giving my insights on the market and sharing some of my technical analysis with others in hopes that we can all grow together. This is the Part 2 video for Fibonacci Explained. If you haven't watched the first video, I urge you to go back and watch that video first and then watch this one. Alright, thank you. And we're going to jump back over to Bitcoin technical analysis. And this was after we broke up here in June, put in our high, came down. We basically were just ranging in this area here and bouncing around. And now what we're looking for essentially is it's either going to at some point in time come up and it's going to break out of this triangle and it's going to put in a higher high on this trend right here, break out of the downsloping resistance, and then potentially move up to one of these targets. Most likely we'll see resistance at the previous high of this year's bull run, consolidate, and then break higher to one of these other fib levels, possibly to all-time highs, maybe not before the end of the year, but if we break out of this triangle after this long period of consolidation to the upside and is confirmed, that means we're going to be going to much higher prices. Now again, if we do the opposite, say we come down here or we come up to the top of the triangle and we do find resistance, often it's going to be in confluence. Look, if we come up right now, we could find resistance right at the 236 and the downsloping resistance. We could always come up here to the 382 and then just have to redraw our resistance if it comes back down. You have to just be able to play it as it comes, but typically you figure whatever the market's most likely to do, if you're seeing that, you're most likely going to be able to make an educated trade and use your edge. Now if we do see it come up and then it bounces back down here, it's very likely we see a reaction here at the 0.5 and the 382 line up perfectly together. Any one of these, especially when you have like 2 or 3 of them in the same spot together, it creates like a little zone. So you might break through one, but you're going to find support at the next one there. So it's important you keep in mind like the little area of like a zone, not necessarily if it just breaks, especially not with a wick. You want to look for confirmed closes, and then you also want to look for volume to make sure other people are seeing the same thing you're seeing. Because if you're the only one who gets in on a trade because you think it's a breakout, it's not going to break out. But if you see a bunch of volume coming in and it starts breaking out, it's most likely you're going to get continuation. And there's oscillators and indicators and way you can actually tell that stuff too, and we can get into that in another video. But now what we're talking about is if it comes down here and it does break out, you see we have our measure move already drawn out, and it's going to put us either to the upside to new highs over the 14,000, or if it breaks out to the downside, it's going to put us back down to this 6,000 range, and that's the measured move. Again, it just looks bigger on the bottom than the top because it is in log scale right now. But anyway, essentially, if we come down, we could find support now here right at this same zone, and that would give us that confluence to where we could essentially consolidate down here or get a strong move back up. And the market was essentially saying, look, we came back down to these lower prices. There's no more selling at these prices, too much demand, and then we're much more likely to go to higher prices after that, because essentially we get that back test that a lot of people failed to get into this whole rally because they were waiting for that back test. They were waiting for it to sell off, and it just never happened. We just kept going and going, and that's Bitcoin. It's parabolic. But anyway, as we get to the top here, and as we get to the top of the range and the bottom of the range, what we're going to look for is basically just confirmation one direction or the other. We're going to look for either a lower low here, or we're going to look for a higher high here. We're looking for a change in the trend, because right now we're trending to the upside, and then we've been consolidating, so the trend is sideways. So now what we're looking to do is we're looking to see, is the trend going to be up again? Is it going to be down? Or is it just going to be more sideways and we'll be trading in a range? You will notice, obviously, over time, though, when you have these slanted lines of resistance and support, that you're going to basically be getting a smaller and smaller range, a tighter and tighter range. So as we get, I usually put the arrows essentially at 75% of the range, because we typically break out somewhere around that area. But you'll find more often than that, the actual breakout is in confluence with where you put those arrows ahead of time. And that's the cool thing too, is even with Fibonacci's, is you can actually kind of get an idea as to where a price target might be, not only by using the 1.618 and some of the other levels that are built into it, but also by drawing a fib ahead of time before it's actually developed, you can kind of see where the lines match up and where it's likely to top out, because a lot of times trend lines that are diagonal are more subjective, as where like a sideways trend line, support line, resistance line is much stronger because there's no subjective to it. It can't be drawn differently. It's a straight line. So a lot of times those horizontal lines will prove to be like stronger support or resistance. So anyway, we kind of took a deep dive into Fibonacci here. We do have a lot going on at once here. We have 4 different Fibonacci's going on at the same time. So that is, kind of a lot. I'm sorry, we have 3 going on at the same time. It is kind of a lot for one chart, so that's why I don't like to use like the oscillator indicator on the same chart, because it can give you a clearer view as to what's going on. And you'll see a lot of times too, not only will you see like the confluence at these different zones and the bounces right off the different fib levels, but a lot of times you'll see fake outs. You'll see it break down, you'll see it come back and test, you'll see it come back like it's going. So just keep in mind that, like I said, look for candle closes and look for it to consolidate around these zones or to shoot past them. Because what you're looking for with resistance and support, if you approach a resistance line and you don't get a strong rejection off of it, it's more likely that if you continue to consolidate, you will break through it. And you'll notice when you come down to a support line, the same thing. When you come down to the support, if you don't get that strong rejection, you come down and you consolidate too long, it's likely that you will break through it. So what you're looking for is that confirmation, breaking out of the actual zone that you've been in with the candle close, because that's what most people are going to go by. And I recommend looking at like the longer time frames, like the daily, weekly, monthly. Even if you're going to go to a shorter time frame, you want to look at those first and see where the reactions are, because a lot of times you'll see something will blow by in the time frame you're looking at, and then when you go to a larger time frame, you'll see it lines up like perfectly and it didn't actually blow by. It was just a wick or something, and then it got picked right up, and then you would have got faked out in that trade, but instead you won't. So I hope that helps, guys. I hope you learned a lot. I do apologize for the spelling error in the first video. I really didn't notice it until it was already done. So thanks for coming by to check it out and tuning in for part 2. I'm Crypto Trend Trader. I appreciate you checking out the channel. If you have any questions or anything, or you have any requests for future videos, please leave something in the comments for me, and I'd be glad to do that for you. Get to a different coin or explain moving averages or something different you're interested in. Fibonacci circles, maybe we'll do one of those videos. We're basically just diving deep into some different topics, dealing with a little bit of education, and then along the way I'm going to be doing some TA videos with targets as well for people to kind of get an idea, because it is important not only to see which way it can break if you're right. Say you say it's going up, it's great to know where it's going up, but what if you realize, oh, I'm wrong? It's good to already have the technical analysis done, already have your targets drawn out, and then that way when the break does happen, one direction or another, you're not immediately scrambling to try to figure out what's going on. You're not reacting to the market, you're acting based on what the market is doing. Because keep in mind, we cannot control the market, but we can control what we do in the market. So anyway, without that being said, guys, thank you very much. Give us a like, follow, subscribe for notifications whenever we put out a new video, or just stop back to the channel and check it out. I do appreciate it, and you will see a lot of improvements as time goes on. If you have any specific improvements, please mention those in the comments as well. Thanks again, Crypto Trend Trader, signing out.